Good morning, everyone. Welcome on this lovely day. I know it's a little warm in here. Hopefully it'll cool off in time. Getting some assistance with the thermostat. Woohoo! So this morning I want to start right on time because we have some wonderful guests helping us out with a conversation in connection with the National Science Foundation audit. There's a lot of work happening at the university, a good deal of it impacting HR. And so joining today and the reason for the topic, journeying together between research and HR, given our interrelatedness. Prior to launching into that conversation, though, a couple of announcements. One, wanted to share with all of you that the state classified salary increase spreadsheets were distributed yesterday afternoon. They have gone out to the deans and the VPs. There are some VPs. If you could please mute your phone if you're joining us via BlueJeans. Thank you. Some of the deans and the VPs have indicated that an additional person to themselves should receive the spreadsheet. So if you work with a dean or a VP and you weren't on that email, it's because I haven't received notification that your dean or your VP would like for you to be on that email. So if that is the case, just ask your dean, your VP to let me know, and I will add you to the email next year. So please know that. Then the second announcement, hopefully you saw the email that went out. PARA, the bill was signed by the governor a week or so ago. There are a lot of changes happening to PARA. Know that HR is verifying a couple of finer points, working with PARA and their legal team at PARA to understand a piece in connection with includable salary and a couple of other finer points on the back end. In connection with the changes with PARA, HR has been receiving some inquiries about the changes. There are a couple of changes one change that goes in effect now, and it's sick leave being a part of includable salary, and we're clarifying the details on that one. But the changes that most impact the employee actually happen in 2019. Nonetheless, understandably, there are questions about what are these changes. Therefore, Harry has arranged for a PARA representative to come to campus and do a session. Now, they are doing a tour. We've asked them to come to our campus, but you may also see if you are a PARA member, you have likely received a couple of emails. I see some nodding. One is about webinars, so you can attend via webinar and learn more about the changes. Another is that they are doing a tour, and Fort Collins is one of their stops. So I want to clarify, in addition to the tour that they're doing, they are coming to our campus at our request to do a session. And so the session is Monday, June 25th from 10:30 to 11:30 a.m., and it's going to be in Ballroom A in the Laurie Student Center. And so I just wanted to be sure that everyone was aware of that. Yes, it's Monday, June 25th. In Ballroom A at 10:30 to 11:30. So please help us get the word out, ensuring that the folks you work with, the folks in your units that are PARA members are aware. So the conversation this morning, the impact of the National Science Foundation audit, the work that's been happening, there has been a lot going on the last 3 years, 2 years, 3 years, I think we're on 3 years, time flies.
Like at least
for sure. But a team from the Office of Sponsored Programs is gracing us with their presence this morning to talk about the changes that have been brought about as a result of that audit. And so I'd like to introduce the team. Diane Bear is the director, Dave Doty, the associate director, Tricia Callahan is the senior research administration and information officer, Dave Schmidt, the assistant director, and Ben Adolf is the cost accountant. So a mighty team to share some pretty important information. Thank you all for joining us.
Thanks for having us, and really she just did my whole part of it. We realize that we have way more material to talk about than we have time to do today, so we're going to kind of speed through some things. Dave's going to start out bringing you up to date about what happens with the NSF audit and where we are and what that caused. And then we're sort of spreading around the joy here and sort of updating you on some other things as we move forward. We will, these can certainly be sent out. We'll be repeating it in the Ram-Around group in July, but we'll try to get through as much as we can. If you have questions, please do raise your hands, and we will answer them as we go along, because we know we're not going to get through everything. So, Dave, you want to talk about how it all started?
All right, I get the pleasure of being essentially the interface between the National Science Foundation, third-party auditors that NSF has hired to audit CSU, and then interact with the campus in getting details and information back from campus, either out of our systems or out of our records and back to NSF. As Diana had pointed out, this is a 3-year audit. It actually covers 4 of our fiscal years. This is what's known by NSF as a data analytical audit. So in the past, what NSF would do is they would come in and they would audit a specific project or a program. In this form of auditing, they have come in and they've selected a period and they have asked us to give us detailed information on every single transaction that has hit an NSF project over this 3-year period. That covered 700,000 transactions in total. And what they did with that information is they stuck it into their data analytical tool, and it spit out some anomalies. As you can probably imagine, when you're crunching that kind of data, it's pretty easy to come up with things that stick out like sore thumb. So there was a total of $90 million of expenditures during this period. 37 million of that related to payroll transactions across that period. So after NSF crunched through these 700,000 transactions, it took them a year to figure out what they wanted to select. They came back to us and they gave us an initial set of 250 transactions that they wanted additional detail beyond the computer dump information that we provided to them from either Oracle or KFS. So that 250 number of samples that they selected covered $2.1 million worth of total expenditures. 52 of those transactions were payroll, 69 were accounts payable, 54 were purchase recs, and 75 were general ledger transactions. So as part of, before we just handed all of this information back to NSF on these 250 individual transactions, we did pretty much a deep dive on all of the information before we handed it out, handed stuff back to them. But what we saw out of those 52 transactions, we saw multiple changes to personnel appointments, where appointment time had been charged to one account, and then 2 months later it's moved to another account, and then maybe 2 months later it's moved to yet a third account, or maybe even back to the original account that it was on. There was poor and limited justifications that were associated with transactions that were moved from one account to another. And one of the big concerns out of those 52 transactions, 11 of them we had 0 effort reporting support. There was no signed effort certification. Or they happened 2 or 3 years after the fact, which is, potentially concerning. So at this point, I'm going to turn it over to Dave Schmidt, and he's going to talk about some of the things we've done to help correct those.
Yes, good morning. Some of the things we looked at, and one of the things I guess I would say we found when we were looking at the information talked about is the fact that I call it my 3Ds, document, document, document. And we had insufficient support in order to substantiate the charges. So here we talked about the multiple changes to what happened to payroll, et cetera. So as those changes take place, everybody's looking at, the thing the auditors look at is the internal controls and the information, how it flows, who verifies it, who signs off on it, why it happened. So the information that Dave just mentioned, which is it not only hit the account, it changed again, and may have changed again. What's that tell us? It tells us somehow our internal controls are not working. We have not did a very good job of validating those salary charges when they happen. The justifications, that we do here. It's not only what we look for, and it's not that we need to get the effort correct on the right count or the right award. You need a better justification than that. The first thing the auditors look for, who, what, where, when, or why. Most of those are answered with the name of the individual. You put an explanation as to why it got charged where it did, but we also need the why of, or the how it's applicable to the new funding source. And the reason for that is because we have to have that relationship between the funding source and the work being done. There has to be that relationship. So that's what we're looking for. That's what, as we've moved through this process, the account techs have been looking at as those have been coming through, because I believe it was effective January 1. We took over the PPDAs. So we're reviewing all of those before they're being approved and going to HR. So we're trying to get, and I must say, the people involved with them have been doing a much better job. Initially, there were some growing pains, but as we've moved forward, the justifications have got better and better. So I'm very pleased with that. One of the things we're looking at is having some procedures in place as to what we're going to be looking for the PPDAs, the effort reporting, the whole 9 yards. And one of those things that I guess the auditors like to see in that is a limitation of when, if there is a correction after a certain point in time, those corrections would have to go on departmental funds and not on sponsored funds. So we're going to be looking at that. We also, in order to overcome some of our challenges, especially with the paper effort reporting process, we worked with Huron and implemented the eCert system, electronic reporting system for charges, compensation charges to sponsored activity. We made a major change in the fact that where it used to be everybody signed individually for their effort and what was taking place, to the fact that we did on a project basis. In other words, an award. So whoever the PI is, sees all the people that are paid on their account, and then can make the determination that yes, this is reasonable, ask questions, work with their effort coordinators at the department level to ensure those are the appropriate charges. So with that.
Sure. So on the training note, as Dave mentioned, we're getting better justifications, and we're going out and working with colleges and departments on what constitutes a good justification, the things that we're looking for. So if you want us to come to your department, to a department meeting, or set up a time for us to come out and talk with you, we're happy to do that. Also, our website will be advanced as part of the OVPR website overhaul. We're hoping to have a lot of this information out there for you on our website once that happens. But for now, if we need to come to your departments, we're happy to do that. We've had ongoing training at department levels. We've had them through lunch and learns. I'm also working with the accounting techs to see what kind of questions they are asking so we can translate that back to you. Because we do hear sometimes that you think you have it right, but then they're coming back for more, coming back for more. You don't want to have to keep doing this again. So let's get it right to begin with.
Yeah.
We have some information about eCert, but I'd rather stop here and say, do you have questions about eCert right now? we're really pleased with this system. In our first round, we did 2 certifications at once. Of course, all of this is related to HR and payroll, and we ended up at 99.3% returned in that first segment. Greatly, with a lot of great effort on Ben Egolf's part here, who you may have heard from more than one time as we were figuring out the system. Keep in mind, in shifting the entire effort reporting from HR payroll to OSP, we had a lot to learn too, and we're still learning it as well. Our people have never had to deal with a lot of these things either. So thanks to Dave's and Ben's leadership, we've really gone a long way. And you can see here where we are in this round. People are much getting into the system, I think, a little faster. And we do still have just a few left from those first 2 quarters where we had to iron out some things that we weren't quite sure how to deal with, including things that are sort of like capacity funds, where we have a PI who's listed, but the funds are actually spent in different places around campus. So we're still trying to figure out some procedures with that. The reason that we're doing it is actually, you want to switch to the next one? It's actually mandated by the federal government. You will have may have seen on Ramaround or in the eScert user group, we've sent out a couple of new policies related. We didn't actually have an effort reporting policy on the campus. We do now. I think the guidelines are up there now. They're supposed to be, which is a much more extensive document that explains how to do things. And then also one on what is an institutional-based salary, which we also didn't really have codified anywhere. So we've been really trying to get things out there where people can get to them, but also there's an FAQ that Ben wrote that's very helpful just for the basic information that you need to have. So we're really happy with this. Now, we do have some news about eCert. It's been upgraded, not here yet, and what we promised the campus originally was that we would go from project doing it by fiscal year, but project, as we're doing it now, to being able to do it by project year, which means that a PI will be able to look at the project during the actual time period, so we won't have these crossover things that we have now. So if one ends in June, then it will certify as of June rather than. So that'll make it a little bit of a difference for you all, because you will be receiving these not on a quarterly basis, but it'll be all the time. It'll just be rolling. So we're looking to put that out. We're trying to figure out how to do that in a way, because we just got the system up, and the new one looks even better. But how do you do that in a way that doesn't make people feel like they're just getting so much thrown at them, not just this system, but all the other systems that have come along, in such a way that it doesn't just drive everyone completely crazy. So if you have advice on that, we would love to hear it. We have had a couple problems with some 1%, what you may have heard as the 1%, the 95% sorts of things. And Dave, I think that you're supposed to take over on that one, but here we know that there may be some questions about this.
Yes, one of the things we looked at is faculty or some PIs, that program directors, et cetera, that are in positions of, they were 100% on sponsored activity, which is fine if that's all you're doing is that sponsored activity. It becomes very challenging, though, if you have people that take vacations, faculty that may over the summer be prepping for classes, any of those types of activities that really do not fall under the guidance of the award. So looking at that, we said most should be 95% at a maximum, so they have some free time to do those types of activities that are specific to the institution. So the other was key personnel have to devote at least 1%, whether it be charged to the award or whether it be initiated or used as cost share. And these are done because if the PI by their sole position should be involved with the award from the beginning to the end. So to be able to reflect some activity in that, we settled on 1% to show a good faith effort that they are actually participating in the award. The current policy is faculty can earn up to 3 additional months of summer salary or salary during the summer. As we just mentioned, you have to be aware of if they're going on vacation, working, prepping their classes, writing proposals. The only thing I know where that may not be as far as writing proposals is the NIH continuations, where their final report is actually the proposal for their next year of funding. Now, if they have to go on to a competitive renewal where they're writing for that, that would not be applicable. So you have to be aware of those things as far as what's going on during the summer months, what the faculty are doing. Anything?
It loses.
Does it?
Yeah.
Okay.
The screen.
Yeah, one of the things we looked at and had talked about was if faculty put time on the awards during the academic year, those salary savings, could they be used to help pay for the faculty's part of their salary during the summer? From our perspective, that's a win-win situation from research. And the reason for that is it gives them some not free, but it frees up salary that they can use for other institutional things, which would be writing proposals, prepping classes, etc. We would like to see those over the summer if possible. If not, then you're in a situation where you really can limit your 3 months of salary if you have other activities you're involved with for the institution. One of the things we never realized when we proposed that is that there's, come June 30th, a 1.5% limit on carryover of funding during the year. And I was not sure for quite some time if that was an institutional mandated requirement or what it was. Well, I was informed by one of the business officers of one of the colleges, it's in state law. So that carryover requirement or carry forward requirement is at 1.5%. However, in talking with the the budget office, if you can say those and identify those dollars as committed, it would not be taken as part of that 1.5%. So, is there any questions on that? Supplemental pay. This came about because of part of the discussion we had concerning how we accounted for things, what we could support, etc. As we went through the process, government requires 100% effort distribution of your base salary. So we define base salary. We did exclude supplemental pay from base salary. Reason for that is we need written policies which are applicable to identify what is a faculty member's 100% load. And that is a combination of research, instruction, service. And department chairs, et cetera, may have an additional part of that, which is administrative. But it's about what makes up the institutional base salary. That second one here came about from a white paper that the Council on Governmental Relations put out 7, 8 years ago concerning effort. And basically they said if you really want to support supplemental salary, you need to be able to define so it's very clear when somebody exceeds that so that we could support it within our system. Also, it needs to be captured in our eCert system to be allowable. And as I've said, we've currently left that out of our definition. At the bottom there is our policy. Okay, it has to be based on some type of percentage if it is allowable. So I've looked at this for 20 years and struggled how you can justify supplemental salary on a sponsored activity. And how do you show somebody's exceeding their research commitment, their service commitment, or their instruction commitment? That's a very difficult thing, and being able to capture that is sometimes very, very tough to do. So the final one there, as I said, we didn't include it, but right above that, that means as we defined what made up IBS here, institutional-based salary, we excluded it because we did not have sufficient documentation, written procedures, or policies that identified when that would be applicable. It takes more. The one thing everybody points to is, well, it's a cross-departmental line. Well, that's just one of the criteria. And even then, the criteria says that normally those are considered part of your academic responsibilities. So we need to be able to show, or would need to show, how we met all the other criteria.
Retro pay. How many in here have had their faculty do retro pay as part of their summer salary? Got one. Come on, there's got to be more.
Nobody wants to admit it.
Records suggest there are more.
Yes. So if you remember back to one of our initial slides, there were, out of the 250 samples that NSF selected, there were 52 payroll. Out of those 52 payroll, 6 of those transactions were summer salary. Now, when NSF was looking at our books, in order to understand, since summer is split across 2 effort certification periods, I had to show them 2 effort certification periods.
So you kept distracting them with where the best beer in town was.
So that was one strategy that sort of worked. The other strategy is that I had to essentially graph out for them how an individual faculty member can do an effort cert, complete that effort cert, and then go into the next effort cert period, and then retro pay comes in and it affects the first certification period, and then they have to go back and recertify the last quarter of the previous fiscal year that they got retro pay on it. The other difficult conversation that happened around that, and I actually had to graph this out for them to walk them stepwise how to tie everything out. Issues around these conversations were, I've already mentioned it, recertifications of effort, because almost in every case, when retro pay was actually put into the system and applied, those individual faculty have already certified on the 4th quarter of the previous fiscal year. And so they had to reissue and recertify their effort. We had difficulties improving institutional-based salary. There are a number of colleges out there, I won't mention who, don't actually issue any congratulations, here's your next pay amount. And so it was, we really had to use the information that was in the system to determine, okay, the institutional-based salary from the previous year was X, the new salary is Y, and the retro pay amount does work out to the amount of the increase that happened in the next fiscal year. The last issue was issues around consistency. So of the 6 summer salary transactions, 3 had retro pay, 3 did not. NSF was asking, okay, why did these faculty get retro pay and these did not? And it's because it's only if the faculty member asks for it. Not all faculty knew that retro pay was even an option. When we brought this up to the associate provost, Dan Bush, he had no idea that retro pay was even an option. So
his mouth dropped open this far.
Yeah. So that's one of the reasons why we're getting rid of retro pay. The other issue around this is that with our new electronic e-cert system, there's no way to deal with retro pay. Yes. For summer salary, so can we do it for July and August?
So what this means is that July 1, the new salary will go into it.
Yeah.
Right.
But let's say that usually when you get retro pay is for some reason the action for summer session didn't get put in before payroll run and that.
No.
It shows up as retro pay.
Right, but that's not special. Yeah, that's different.
Yeah.
It's
Yeah,
Totally different.
this is to pay a faculty member their 3% increase and having that go back to cover May 16th through June 30th period.
We ended up, we had a legal problem with that because Board of Governors approved the new salaries. It's for the next fiscal year, next academic year, not for back. You look at the uniform guidance, it still talks about how it is supposed to be the base salary at that point in time that the faculty earn it. So what we decided as an institution, the best way we could support it was July 1 to start.
And another place where a partnership with HR was very helpful in helping us get this worked out.
So in essence, what this means, where in the past, a faculty member could receive their next fiscal year pay for summer pay, how it works now is the faculty member receives the rate of pay for any summer pay for the fiscal year in which the dates reside for the work that they did. So pay May, June is for the current fiscal year rate of salary, and pay beginning July 1 through any time in August is the pay of the salary for that new fiscal year.
So if I go in and click the ABO or whatever that box is for July and August only, will that increase their July and August then? Because we put in dollar amount, and we do it before the new salary has been announced.
Yeah, so what, and that's what changed in the system, sorry.
Thank you, Nick, for
Shouldn't have
pointing
sat so
that
far
out.
back. So that's exactly right. So you put in the salary, or the summer session assignment and the amounts month by month without knowing necessarily what the increase is going to be. And so then you click that ABPU flag, auto-based pay update, and then you can still check it for however many months you want, but now it will only update July and August when we run that process.
It will not cover May 16th
I believe
through
that
the end of
it's-
May and then the June period.
Right.
They get what their institutional base salary was for that fiscal year.
I actually think that's good. I thought it was unfair. They got it. I did it.
It wasn't fair because just by not knowing you, and I did have departments when we went around and talked about it, said, please don't tell my faculty this is an option, because they didn't want to pay the extra dollars to do it. So this has made it much more fair for the faculty.
I just want to confirm, so it's not going to automatic salary in July. They actually have to put it.
Correct. The ABPU flag still needs to be checked on those months in order to make the change.
I'm glad you were here, Nick, because
Well, Diana asked me to be for this exact reason.
because I would have no idea what to tell you guys. So we've talked about the issues. So I'm going to talk about some other stuff that's maybe not terribly germane to all of you, but it's germane to the NSF audit as a whole. I mentioned that at the beginning there was payroll transactions that were selected, but there were other types of transactions that were pulled as part of this 250 selection. There was accounts payable transactions. Issues of concern in this area was international travel. A lot of times there was lack of support, illegible support, or even no support that was associated with a lot of that travel. So we had issues surrounding that. We had issues around participant support costs and keeping them segregated, and faculty wanting to take participant support costs and use them for other purposes. Other issues we had in accounts payable were things like entertainment costs, which can be potentially allowable. However, they require prior approval. Talking about this,
Yeah, so
Tricia?
we're doing a lot of review of our policies and updating. When we looked at our participant support policy, it actually followed NSF's policy because uniform guidance had not yet come out when we wrote the policy, and there was nothing in the old circulars that addressed participant support. Now there is. So we've updated that. We've put guidance out there of what does and does not constitute participant support, clarified some of the language, trying to help people understand that those funds are moved into an account and they have to be used for participant support. They cannot be used for other items. So we're going through policies, trying to get them updated. Again, as our new website comes up, you'll be seeing that information. Been doing a lot of training out there through the Lunch and Learn series on these topics, on writing good justifications even at the proposal stage, and then making sure we have proper documentation and justification come award time on these things, including international travel, participant support, and others. So same thing with entertainment costs. Anytime we have these kind of one-off things that seem to go against some of the cost principle allowabilities, to make sure that we're having proper documentation on why in this instance it was allowable and that the sponsor has allowed that charge. So I think that's really it. This is just a link to the updated policy on our website. It's available for you. And more areas of concern.
Oh, I just sat down.
I know, sorry.
Well, but, we're going to get into sub-awards and some things like that that aren't quite as germane. So what questions do you have at this point? Because we want to be sure and answer
The HR question.
the HR yes, HR questions. You're limited to any kind of question.
Yeah, and repeat the question for the people.
Yeah.
The question was, what is the difference between participant support costs, salary costs as it relates to sponsored activity? And I guess how I would start with that is I would start at the top with the student. The difference between a salary and a stipend is for the benefit of the student. They do not have to work for it. They do not have to accomplish anything for it. They're paid to go to school. Basically, it's a cost of living payment to the student, whereas a salary is for the benefit of the institution and furthers, especially in the sponsored program area, the research work that the PI is doing. So our GRAs are salaried. They are not stipends. They get full benefits for that. They're considered an employee. They get a W-2. Student, whether it be participant support, whether it be fellowships, whether it be trainingships, et cetera, receive what we call a stipend. And those are for the student to learn, or as I said, a cost of living. Does that help?
Oh, I know all this. To clarify for the group.
Yes.
Regarding the difference, all of that. So what I maybe for this meeting together, we look at those conflicting policies, and creation.
Okay, the question was conflicting information between HR and sponsor programs and the difference between stipends, salaries, et cetera. And I would agree with that. I think we need to include BFS, the tax people there, et cetera, because it really has come down to an IRS interpretation, and yes, both are allowable. A student can be both salaried and receive a stipend.
That's what they've never approved.
Okay, yes, another question.
There was some talk about emotional
In the what process?
PDPA.
Transparency of the PPDA. Yes, well, and I believe that's, where we're at right now with the PPDA process is Ron Splitgerber and his group, which is our IT support and people that do that, has set up a mailbox specifically for sponsored programs. So you put the Tech 3's last name in there, who the PPDA is for, and you can put a time frame, et cetera. And those are funneling into there, and there isn't much visibility at this point. The talk we have is, and I know Ron's all for it, I think Nick will be a part of this, is we're looking to make it much more transparent. So as those get into like a workflow, you would be able to see where they're hung up, where they're stopped, et cetera, or where they're going. That's down the road. Nothing has happened, to my knowledge, has there, Nick? Okay. Yes. Okay, the question is about being a TA and also receiving a stipend. Your example, I would say no to, because an REU is for undergraduates and a teaching assistant should be a graduate, technically.
An REU is for a research graduate.
Right,
Yeah.
a TA is a graduate.
No, not necessarily. We have undergrads do different types of TA. They're just classified that way.
Okay.
They're not a graduate
To-
TA. It's a different thing.
Okay. Thinking whether they're TAs, if they are working for a salary, whether it be in the lunchroom, whether it be in the department, wherever it may be, that is an employee relationship. If they are also a participant in an REU, separate and distinct, the things I look for are, does it conflict with what they're working with? Usually it does not, because they're, as a student, we try and work our hours so they could participate in the things they need to. As long as they did that, they've completed the requirements for the training, et cetera, there's no reason they shouldn't be able to receive that stipend. Yes. Any other questions? Yes.
Can you touch on de minimis time and the threshold?
Something under 1%.
You have to repeat it.
Oh, what is de minimis time? It's something under 1%. It's something that is so minimal you really don't capture it.
And what happens when multiple, one thing itself is not, but multiple meetings and, or training and, or then what?
De minimis with multiple activities that probably add up to something greater than de minimis. Then you probably should capture that as an institutional activity.
This is a really hard one, because everybody wants to know hard and fast, how many hours do I have? But if you're a research administrator, the overarching phrase in our profession is, it depends. And it depends. It is very much a judgment call. But if it's something that they're doing on a regular basis, then it's not really de minimis. You need to bring it down. Does that help? Yeah.
Okay. Any other questions?
May want to skip the.
We have 15 minutes. Yeah, I won't go into a heck of a lot of detail, so again, at the very, very beginning, we talked about 4 areas. The next area of those 250 selections were purchase recs. Issues that we saw within those were a lot of split purchases, with piece of equipment being purchased off of 5 or 6 different projects, with little justification on how they impacted those individual projects. Also had some issues around subcontracts. There was probably about 5 or 6 projects within that 250 audit sample that had, that were around payments to our lower tier subcontractors. And under uniform guidance, we're required to do quite a bit of subrecipient monitoring. This audit period covered the old A133, A21, A110, but also a part of it was under the new uniform guidance because it was such a broad period. So some of the things that we've done in that, we've done some trainings on cost principles, including allocation methods. We've done a number of ram-around presentations on issues around high-risk subawards. And we also, when Carol Wood left, he was our subaward administrator. We hired a new subaward administrator. And as part of that process, we're revamping all of our processes around subcontracts and subrecipient monitoring. Probably not terribly germane to this audience, but when, especially when you're issuing an international sub, there's a whole host of things that the federal government expects us to have from those entities. Do they have a negotiated F&A rate? If not, they get a de minimis amount. Are they registered in the System for Award Management, SAM? Do they have COI policy? If it's an NIH funding, how do we get them money? If we're giving money to this really small entity or an individual in Africa or in Mongolia, how are we going to get money to them? Are we going to wire it to them? Are we going to send them a check? Are they going to need an advance payment? A lot of times you're looking at a small individual or a small group who doesn't have a lot of money. They can't bankroll a research project, and a lot of times they need money up front. And then we also have issues around invoicing. When they would invoice us, it would come in, even though we say it needs to be in English, it comes in Mongolian. And the support detail that's associated with it is also in Mongolian. So, we have issues around them. The last area that NSF pulled from, and this is actually the most tricky, this actually constituted one of the bigger subsets of that 250 selection, and the general ledger transactions. Those included work in progress accounts. That's where we're fabricating a piece of equipment, and so we have all kinds of charges going on to this WIP account that are not really equipment. It's labor and pieces and parts to actually manufacture something internally here on campus that will end up becoming a piece of equipment. Had lots of problems and issues with that. Have lots of issues around 21 account activities. Those are recharge activities. And then there was also a lot of GECs, general error corrections, of moving selected items of cost from one project to another, sometimes to another, without having a lot of good backups. Detail around the movement of those charges. So some of the things that we've been able to accomplish since NSF came and first engaged us in 2015, it's really forced us to do a deep dive on all of our processes, practices, and procedures. We've done a comprehensive research administration self-study and a risk analysis. As part of that risk analysis, we've implemented a reorganization plan within sponsored programs that will help hopefully strengthen some of our post-award monitoring on a number of fronts. We've talked about some of these things. Effort, for example, where we historically had never touched those, now we are. As part of this process, we've hired Dave Schmidt as the assistant director for post-award, and then we also hired Tricia for training. And we've also been able to beef up our account techs. Our account techs were pretty much they had the ability to set up accounts and issue invoices and financial reports. There was not a lot of ability to go do in deep dives. And what we also were able to do was hire Ben as our cost accountant, who's going to act more like an auditor in the background and check up on selected items of cost. Sort of mentioned recharge accounts. We have a whole long laundry list of additional things that we need to tackle. I won't go through all of them, but it's an ongoing process. But it was, I'll tell you, in 2015, when NSF showed up at our doorstep and told us that we needed to give over 700,000 individual transactions, and they were going to do this analytical audit, had a lot of sleepless nights since that period. So hopefully we're getting close to wrapping up this NSF audit. It's still not over 3 years in, and they're still asking us questions. So anyway, with that, we thank you. Any general questions about the NSF stuff? Any additional questions on HR?
I would like to say, I've been here a little over 2 years. We would not have been able to do this without collaboration from all over the campus. You all, HR, BFS, everyone has helped with this, and it has been truly the most collaborative. I've been doing this now 33 years. This is the most collaborative place I've ever been. Thanks to all of you help with all of the things that we're facing. We really appreciate it, and we very much appreciate the great amount of help we've had from HR instantly whenever we needed it. So thank you as well.
Any final questions? Well, please join me in thanking Diane, Ben, Tricia, Dave, and Dave for joining us this morning. Thank you.
I fell asleep, but I could tell.
No, that was riveting. Thanks, everyone. Have a great day.